I am very deeply troubled about some of the allegations that have been made about improper fraudulent servicing and foreclosure processing. In one example, a constituent of mine from Whitehall, seeking a modification from Bank of America, was told by a servicing associate that while the loan modification was in review, the homeowner should not make any mortgage payments. Let me repeat that. He was told by their servicer, Bank of America, not to make any payments, and that if they did, they wouldn't qualify for modification. The gentleman from Helena, how is it possible he would receive a letter indicating that he is in foreclosure before foreclosure processing is restarted in the state of Montana? There's no doubt in my mind this is not isolated. Montana is not a state where people come to the U.S. Senator just willy-nilly. At a minimum, we need to understand these risks before the Fed moves forward with guidance allowing banks to increase dividends, because quite frankly, there ain't going to be any more bailouts. I mean, to be honest with you, some heads have to roll if they're given that kind of advice. That's just the way it is.
Senator Merkley.
Because we have millions of people in this country that are underwater in their mortgages, right? We know that. I, for one, don't believe that it's possible to prop up the value of all of these houses. That's impossible. And that it would be foolish public policy to do. Why can't we get all of this self-interest aligned in a way that will allow us to proceed expeditiously, so that not just so that my constituents can get on with their lives, which they desperately want to do, but so that we can get this economy moving again? Professor.
I think there are at least two problems. One problem is mortgage servicers, and I think you've heard a fair amount of testimony already at this hearing about the incentive alignment problem. Simply put, foreclosure is either less costly or more profitable than modification in many cases. The second problem...
Not as far as the investors are concerned.
No, this is the servicers representing their own financial interests, which are the servicers' financial interests do not match the investors. The second problem is it comes with loans that are not being serviced by a third-party servicer, but with loans that are actually on bank books. There is a strong disincentive for banks to recognize losses on mortgages quickly.
What percentage would you say of?
Around 40% of mortgages in this country are not securitized. We don't actually know how many mortgages there are in the U.S., which is just kind of an astounding regulatory failure to gather information. No one knows the number, somewhere between 50 and 60 million. But of the mortgages that are on bank books, if the loan defaults, the bank can stretch out the period of time before foreclosure. That means that the bank is stretching out the time before it has to recognize the loss. If the bank modifies the loan now, let's say it writes down principal now, it's taking an immediate loss. And this is particularly a problem with second liens, because almost all second lien mortgages are on banks' books. There are around $400 billion in second lien mortgages out there. That is roughly equal. They're held by the four largest banks: Bank of America, Chase, Citi, and what am I forgetting? Wells. That's roughly equal to the market capitalization of those four banks. So if they started writing off their second lien mortgages, they would have no capital left. They would be insolvent. And that creates a strong incentive not to recognize losses and to do extended, and just try and pretend that they aren't there.
Hello everyone, welcome to Global Government News. Today is Friday, November 19th, 2010, and I'm Darko. Welcome to Global Government News. I'm going to cover the economy in this video segment. I recommend all new listeners to please visit my website at www.ggnonline.com. That's ggnonline.com. I post all my videos there now. As of about maybe 3 months ago, I wasn't really doing it before and keeping up with it, but within the past 3 months, every video that I've made has been posted there, along with some other information about me, what I'm doing, where I come from, and my views. Basically what I like to do here, and this is just for new listeners, obviously, I appreciate all those people that subscribe to my channel, but basically I like to read headlines, and I may get into a few paragraphs of that story or just the headline and give my opinion, and I post all the links in the description below the video so you can locate the links to all of these or most of these stories. Some of them are bad, but here we go. This first one up. Oh, and so just going off that video that we just watched, God bless Tester. I remember when he won the Senate in 2006. I'm so glad I know about. I've learned how politics really works and what it is. It's just a control mechanism, and you can just see the evil that prevails in those rooms, in those sessions. Like the Democrat from Colorado. I mean, you can just tell the guy's a scumbag. But there are a few people like Tester that do have a spine, a backbone, some brass cheones, and a conscience, and maybe even a soul. I think he does. And so I thank him, and I thank the Georgetown professor for saying what he did, because it does take a lot of brass cheones to be able to say that. The banks rule, and the banks run the world, and they pretty much have been running it since the Knights Templar, where they were the first ones to really start issuing out loans and that, and storing currency, storing money, gold and jewels and all that. So, I mean, they're still running it, the show. They have their little tricks that they like to pull to mask all the fraud and scams that they carry out on consumers and taxpayers who bail that out. So here we go. Money, Soros, conditions pretty perfect for gold. Billionaire investor and philanthropist, i.e. eugenicist, George Soros, may be cutting back on his gold bets. But he says the precious metal still has some kick to it as long as conditions like low interest rates prevail. Says, quote, the conditions for high gold are pretty perfect, he said during a speech in Toronto Monday evening to accept the Globalist of the Year award from the Canadian International Council. How about that, guys? You guys like that? The Globalist of the Year. So we're going to move on here. This is a kind of a neat story. Palladium keeps climbing, gold soft. I had a friend that used to collect a lot of silver and gold, and he also collected palladium. If you have enough money to invest in it, it says palladium has rallied almost 12% over the past 2 days, spurred by fears that Russia, the world's largest producer, has exhausted state stockpiles of the precious metal. Gold steadies on Irish aid hopes. Gold prices were little changed on Friday as the euro bounced on growing confidence that Ireland's debt crisis will be resolved, i.e. They're going to steal money from taxpayers in order to pay off the banks. But China's measures to tighten its economy kept bullion under pressure. Euro gains on Irish debt crisis hopes. Oil falls. Ireland's debt crisis will soon be resolved, lifted investor sentiment and the euro on Friday, even as U.S. oil prices slid after China sought to curb inflation for the second time in 2 weeks. Oil slips on China bank reserve move. Again from Reuters, U.S. oil prices fell on Friday and logged their biggest weekly percentage decline since August after China raised bank reserve requirements a second time in 2 weeks as the number 2 oil consumer tries to curb inflation. The People's Bank of China said that it would increase banks' required reserves by 50 basis points, a less aggressive move than the interest rate rise that many had speculated could occur as soon as this week. Next one up, China, Ireland drag European shares lower. European shares fell on Friday on global growth fears after China raised bank reserve requirements and on investor concerns about Ireland's debt crisis. So, U.S. unemployment claims surge again. This is from Press TV. U.S. Labor Department figures reflect a rise in new unemployment benefit claims with a steep jump in the number of people collecting emergency benefits. And we're going to keep moving here because it's got a lot of news. Ireland told, take EU bailout or trigger crisis. Does that sound familiar? It sure does. Sounds like what happened in the United States in 2008 when Congress was threatened with martial law and that there would be a global meltdown if Congress did not pass the TARP bailout fund. So Dublin warned it has 24 hours to make a decision as EU emergency takes loom amid fears Irish bank contagion may spread to other Eurozone countries. So see, it's the same rhetoric, same crap, right? It's the same bankers running the world and their little Ponzi schemes. And, like the professor said, all of these banks are insolvent, so they're not even really legitimate. They don't even hold in reserves what they're lending out. All banks are insolvent. Even my bank here in Indiana, it's insolvent. Yet they go on and smile and try to give nice little PR statements in the mail to get you to take on a loan, but the whole thing's a fraud. And that's what I've pretty much come to learn, besides the fact that politicians, most of them lie, and that statism is dead. So sorry, give my little personal opinion there, but this is a stick-up. They pull out they carry out these schemes, these global schemes, and then when it comes to light, because eventually the fraud is going to show its face in the market, and when that happens, the stick-up occurs, where you better give us all your money or we'll shoot ourselves. So, but Ireland, like most countries, including the U.S., has a puppet regime in control, so they're not being represented. The people aren't being represented there. Irish bailout talks underway in Dublin. So the stick-up took place, and now bailout talks underway in Dublin. The Irish Republic has begun talks on a multi-billion-dollar economic bailout package with experts from the IMF and the European Union. So prepare to go into IMF receivership, Ireland. Aaron Gobra. Japan passes $62 billion stimulus package. Japan's lower house of parliament has approved a new supplementary stimulus package to tackle the country's financial woes and push forward with economic recovery. Italy adopts austerity budget for 2011. So here we go, just like Greece. Italy's lower house of parliament has adopted an austerity budget for 2011 as official data showed industrial orders falling in September and export growth slowing in October. Austria to withhold EU aid to Greece. And it says here, Austrian Finance Minister Josef Pröll says Greece has not met its commitments to the EU in return for massive bailout packages it received. Foreclosure gate could force bank nationalization. So I still have a decent amount of articles to cover here with the headlines, so I'm going to keep moving. Like I said, the links will be posted for all these articles, so please check. This is a Reuters article. Foreclosure mess could wreak havoc, says the report. Widespread problems in how U.S. lenders documented foreclosures could spark a wave of legal challenges, resulting in massive losses to banks and serious new troubles for the housing market. A federal watchdog warned on Tuesday, says New York State manufacturing plunges, says the New York Fed, and manufacturing nationwide, I think, is pretty much died over the past 50 years, unfortunately. U.S. banks may lose billions of dollars. A U.S. federal watchdog has warned that American banks could face billions of dollars in losses over widespread problems in foreclosure paperwork. And that's what that video was covering in the beginning. Governor warns cities may go bankrupt. Governor Granholm is predicting more cities may face bankruptcy in the year ahead. And part of the solution, she says, should be new revenue. This is just one of the more issues for the new governor, and says we'll face on January 1st. The issues are mounting up, and the new governor must tackle a $1.6 billion deficit. Got to keep moving. U.S. sets 50 bank probes, says FDIC steps up investigations at failed lenders. These numbers will increase. Wall Street quietly seeks to undo new financial rules. This is a pretty good article from McClatchy. Please check this out. I don't have time to read it all, but it says the measure named after proponent Mr. Volcker seeks to prevent banks from betting against trades that they made on behalf of their customers, mostly Goldman Sachs, and then goes down and talks about how they should at least have a decent amount of reserves saved up so they don't have to get bailed out. The Washington Post runs an article entitled 5 Myths About the Federal Reserve, authored by an economist linked to the Rothschild, and it says the article was authored by Greg Ip, the U.S. economics editor of The Economist, and according to Wikipedia, it says this Rothschild banking family is a partial owner of the firm that operates The Economist. UK home rental average costs to rise. Financial crisis not over yet, says IMF chief. IMF chief also says Dominique Strauss-Kahn urges leaders to cede more sovereignty to the EU. So how you like that over there, Europeans? Fed may hesitate on more easing after critics question employment mandate. Next one up, Bernanke takes aim at China. He's fired back amid criticism at home and abroad as far as printing more money. Says China's move could counter Fed's effort. Bernanke says bond buying plan necessary to reduce unemployment and boost the government employees owe billions in delinquent taxes. Survey says health of house mortgage slaves at risk.